Welcome back to the Deep Dive. Today we are going deep on, I think, the biggest succession story in modern finance.
Has to be.
We're talking about the post-Warren Buffett Berkshire Hathaway. And we're really going to zoom in on the two people who've been handpicked to manage that massive public stock portfolio after he steps down as CEO.
Right, which is slated for the end of 2025.
So our mission today is pretty straightforward. We need to get inside the minds of these two managers who are about to control just a monumental slice of the global markets, who are Todd Combs and Ted Weschler.
And maybe more importantly, why this dual-track approach? Why two of them?
Exactly. Why is this pairing the future of value investing?
It's such a critical question. And the scale of what they're taking on is, well, it's almost hard to wrap your head around.
Give us the number.
We're talking about the public investment portfolio, which, as of the latest filing, September 30th, 2025, stood at a staggering $283.2 billion.
Billion. Wow.
I mean, to give you some context for that number, that is a balance sheet larger than the GDP of many nations. The decisions these two make will literally move markets.
Okay, managing money at that scale. It requires an absolutely bulletproof structure. So let's unpack this a bit. Before we get into Combs and Weschler as individuals, we have to talk about the plan.
Right.
Because it's not about finding one new Buffett.
No, that's the key. It's a deliberate triumvirate. They've split his authority into three very distinct command centers.
Okay, so who are the three pillars?
First, you have Greg E. Abel. He's the designated CEO.
Right, he's taking over all the non-insurance operations.
Exactly. Think energy, the railroad, all of that. And crucially, he holds the final authority on capital allocation strategy for the entire company.
So the buck stops with him.
On the big picture stuff, yes. Then you have Ajit Jain,
The insurance guru.
vice chairman, overseeing all of those massive, complex insurance operations. He manages the float.
And then finally, our two guys.
Todd Combs and Ted Weschler, the investment managers. They'll become co-chief investment officers, and they are responsible for that entire public equity and debt portfolio.
And this is where we get to that critical dynamic, what you call the operator versus pure protege model.
Okay.
This isn't just two guys doing the same job.
Not at all. And that's the genius of it. Combs is a hybrid. He's an investor, yes, but he's also a senior operational executive. He's the bridge.
He understands the businesses from the inside out.
Precisely. Weschler, on the other hand, is the pure capital allocator. He is intentionally detached from the day-to-day operations. His job is just exhaustive market research. Find the best ideas.
Let's start with Todd Combs then, the operational bridge. His background. It's all about risk, right from the ground up.
Absolutely. This isn't a guy who just lived in spreadsheets his whole life. He was a bank regulator for Florida's banking division.
And he worked at Progressive Insurance.
Deep inside their pricing department. So he comes to investing with this fundamental, almost granular understanding of financial risk.
And his entry into Berkshire is, well, it's vintage Charlie Munger.
It really is. Combs basically networked his way to Munger, and they just clicked. They bonded over, of all things, obscure books and diverse topics.
It was a culture fit first.
That was the first hurdle. He had to prove he thought like them before they even looked at his returns.
But here's where the story gets really good. The interview with Buffett. The moment that sealed the deal.
You're talking about the Geico question.
Tell us about it.
Buffett asks him to compare Geico, Berkshire's crown jewel, with its big rival, Progressive, where Combs had worked.
And he didn't just tell Buffett what he wanted to hear.
No, he was brutally honest. He said, basically, Geico's better at marketing, but Progressive is way ahead on its data-driven risk analysis, its underwriting. He identified a strategic weakness in Berkshire's own baby.
Intellectual honesty.
That was it. He was hired in 2010.
And his role today is just so unique. It's this triad of responsibilities.
It is. So one, he's an investment manager with his own autonomous portfolio. But two, he's a serious operational executive. In 2020, he was named chairman, president, and CEO of Geico.
The very company he critiqued.
Tasked with fixing the exact problem he pointed out a decade earlier. Specifically, closing the gap in telematics. That's the tech that tracks your driving habits.
And the third part of the triad.
He's on the board of JP Chase. That makes him Berkshire's strategic link to the entire financial and tech world.
So with all that operational DNA, what does his investment philosophy look like? He's got that famous formula.
The three-element multiplicative formula is so powerful. Quality company.
Times excellent management.
Times a reasonable price. And the key word there, the thing you have to get, is multiplicative.
Meaning, if any one of those is a zero.
The whole investment is worth zero. If the management is bad, it doesn't matter how cheap the stock is, it's a zero. It forces a complete holistic view.
And I heard he has a specific way he analyzes companies, a document he starts with.
He does. He starts with the cash flow statement. Always.
Yeah? Why?
Because, in his words, the income statement is the most easily manipulated. Cash is harder to fake. It gives him the pure economic reality of business.
Okay, now let's pivot to Ted Weschler, the pure allocator. A totally different path.
Completely different. He's a Wharton grad, but his reputation was built entirely outside the corporate structure, just generating insane returns.
Tell us about his hedge fund, Peninsula Capital Advisors. The numbers are just eye-popping.
They are astonishing. From 2000 to 2011, think about that period. You had the dot-com crash. You had 2008. His fund delivered a cumulative return of 1,236%.
1,200%.
That's a net average return of 22.6% a year. The S&P 500 over that same period, it returned 0.5%, basically flat.
Unbelievable. But his hiring story is even better. The famous $5.2 million job application.
It's legendary. He won the charity lunch auction with Buffett.
Twice,
bidding $2.6 million each time, and he did it anonymously. It was only after the second dinner that Buffett offered him a job.
What does that tell you, that he was willing to spend that kind of money just for access?
It shows you he's a pure, bold capital allocator. It was an investment. And it was an outsider's acquisition. Buffett wasn't looking for another internal promotion. He was buying the best market talent he could find.
And Weschler's role at Berkshire reflects that. It's very focused.
Singularly focused. He is purely an investment manager, no operational roles. He even took the job on the condition that he could keep living in Virginia and just commute.
Reinforcing that detachment.
He is the concentrated market counterweight to Combs's hybrid role.
And his philosophy is all about compounding and concentration, which we see in that famous story about his personal Roth IRA.
Right, the one that was disclosed in regulatory filings. It's jaw-dropping. He apparently grew it from about $70,000 to over $269 million.
How is that even possible?
It's his method in a nutshell. Exhaustive research, stocks only, make big concentrated bets, and then hold for the long term. When he finds something, he swings big and then waits.
So now that they're both there, how do they actually work? You said they're like scouts.
That's a great way to put it. They each have total autonomy over their own portfolios. Buffett has said, they do not check with me before they buy something.
And they look at smaller ideas.
Yeah, deals in the, say, $500 million range. Stuff that's too small for Buffett to even consider anymore. They're exploring the field for Berkshire.
And that scouting has been incredibly important, especially in pushing Berkshire into tech.
Oh, it's been transformational. They are explicitly credited with bringing the initial investments in Apple and Visa to Berkshire.
Which expanded that famous circle of competence.
Massively. And now Apple is the single largest holding in the entire portfolio. That's their influence.
Which brings us to a very recent, and I think, highly symbolic investment, the new stake in Alphabet.
Google.
Yeah.
A $4.3 billion stake revealed in the Q3 2025 filing. The timing is everything here.
It's the last big move we see before Buffett officially steps down as CEO.
It's the ultimate signal. Buffett and Munger have both publicly called not buying Google years ago a huge mistake, a sin of omission.
So this
is the next generation. Combs, or Weschler, or both of them, directly correcting an admitted mistake of the old guard. It's a statement. It says the future is tech forward.
Okay, for the listener who really wants to dig in, we have to address the performance numbers that you sometimes see in the media. There's this analysis that their combined portfolio has slightly trailed the S&P 500.
Right, something like 7.8% versus 12% for the index over the last decade.
So what's the story there?
That figure is, frankly, misleading. It's used as a weapon, but it misses the entire point of their role.
How so?
It focuses only on the basis points in their smaller individual portfolios, but it completely ignores their strategic value. It ignores the fact they brought Apple and Visa, multi-billion-dollar winners, into the main portfolio.
And it ignores all of Combs' non-portfolio work.
Exactly. His work on the huge precision cast parts acquisition, the years he spent on that healthcare venture. Their value isn't measured in quarterly performance. It's measured in cultural fit and long-term strategic impact.
So when you put it all together, what does this mean for you, the listener? How do these two guys fill the shoes of a legend?
It means Buffett's genius has been brilliantly split in two. Greg Abel gets the operational mastery and the giant company-level capital allocation.
And Combs and Weschler get the public market investing.
They inherit the pure investing side of the brain.
And in that new structure, Combs really is the linchpin, isn't he? He's the nexus between the two worlds.
Absolutely. His dual fluency running Geico, sitting on the JP Morgan board, he speaks Abel's language of operations and Weschler's language of markets. He makes the whole thing work.
So what you're understanding now is that the future of Berkshire isn't about one person. It's about combining two very different but very complementary analytical toolkits.
It's a dynamic duo built for the next 50 years.
Okay, let's leave our listeners with one final provocative thought.
Consider this. The new CEO, Greg Abel, is a pure operator, but he holds the final authority on capital allocation for the whole company. Yet, to manage that huge public treasury, he has to rely completely on two autonomous, market-focused investors.
Gomes and Weschler.
How does that dynamic between the pure operator CEO and the co-chief investors, how does that relationship define the risk tolerance and the growth strategy for Berkshire Hathaway in the decades to come?
A question that will define value investing for an entire generation. Thank you for joining us for this deep dive.